Good afternoon, everybody. This is Mark Lambert from Theta's Pendulum, where I'm partners with Anthony Marino in our market timing and pricing educational service. I had some intermittent internet problems over the last couple days. Tech has just left, and finally I'm up and running, and I'm running about 32 megs right now, which is nice, which is a little bit faster than what it was before. But I didn't do any trades today, but was able to monitor the market on and off here and there while things were working. But everything's up and running now, so I'll be back to trading again tomorrow. I want to go over a couple trades today on how to increment Fibonacci projections. Basically, I'll just show a real quick recap of the ES right now. The ES basically has done a 1-to-1 fib and has double bottomed today. As you can see, I've measured this first inflection down from 5-1 to this inflection back down. The market was using the ladder as the price grid as a ladder, and basically we bottomed on a 100%. I don't know if this move is over though yet. I think this is just probably going to be just another bounce and then to sell into again. But either way, at a 1-to-1 fib, I would close out any shorts and just start setting alerts at that point in time to see where the market is going to go, and that way you can just trade with the trend. Anyways, I'm going to do the Russell 2000, which is something I trade extensively. And I'm going to show how I set myself up this morning, and I'm also going to show a different type of Fibonacci projection I've been using also. And right now, this price grid, which I've set up with a retracement tool, I'm going to show you what I have here. These are basically the ratios that I'm using, which are basically 12 ratios, harmonic, 360 degrees divided by 12. Just like the 5 would be a 72-degree move, and so on as you go around the circle. And what I did, the market had been moving up since yesterday. It's been moving up in an upward trajectory, and then at one point in time it did change in the morning. The first thing you always want to do is basically measure the first inflection. That is the most important part. And basically what I did is I just pulled that inflection right here. As you can see, I got the levels right there, and then I would superimpose it onto the second, the second wave, I guess you would call it, which ends up being at 803.01. If you watch this, it's going to move the numbers. I bring this down to 803.01. Boom. Now this is the price grid that I also follow. This is basically the harmonic price grid. As you can see, line that up perfectly right on the top here. There we go. Market just closed. As you can see, when you superimpose this 803.01, which is at this level right here, the market used this price grid bouncing off of the 300 until finally this morning it bottomed on the 500, which is basically a 72-degree move on a 360-degree circle. At this point in time, the market basically had the sideways move all day today. It moved up in a 3-wave sequence from about 5 o'clock this morning. It moved down in a 3-wave sequence, at which point in time, using Elliott wave pattern, I would consider that as being okay. It started with a 3 and then another 3. So I either have to expect a triangle or a flat pattern. A flat pattern would move up in a 5-wave sequence at this point in time, and that's where you would know that the correction is complete, and then you can hop back in with the trend, which is primarily down right now. What I did at this point in time is I would take the Fibonacci projection tool or extension tool, measure this bottom to this top, and then back down to here. And as you can see, the market was using this as a ladder to climb up until it came closer to 100%. And the reason why I didn't go over the 100% is you always have to look at the previous swing high as offering resistance, which it did. And now it also leads me to another thing. I believe at this point in time we were forming a triangle. Reason being 3, 3. Now we have another subsequent 3 waves. So this would be A, B, C. We did another 3-wave move down, A, B, C. So this would be wave D, and then we did another move back up again. This would have been A, B, and then C. So this would be wave E. So we formed the triangle. With the triangle, that gives us a hint that the next move is going to be the terminal move. Basically, a triangle only appears prior to the last move. It could be in like a B wave, you know, in an ABC correction, or it could be in wave 4 in a 5-wave sequence, or whatever. You get the idea. Basically, it's telling you that the next move is going to be the ending move. At which point in time now, since we've determined that this is wave E, we know that this bottom was going to have to break. So at this point in time, we know that this was wave E. And of course, you can always measure all these internal moves too, like this, because a lot of times they'll you can measure this wave to this wave, or what I normally do, I just go internally and start looking at where the market is moving. As you can see, I kind of use it a little bit as a price grid, but you know, it's like it was kind of sloppy. But either way, an E wave often becomes truncated or will not come back up. And if I struck a trend line from A to B, it will not go back up and touch it and then move back down. Usually it'll move down prior to that. Now since we know we're moving down in either a fifth or terminal wave, you want to take the next projection, measure this move, and try to find where the bottom is going to be at this point in time, and by using indicators and so on. As you can see, the market came down, bounced off to 161.8, moved back up to around the 81, came back down, breached this level. We're also at the 600 also right now, which is also the 6th harmonic. Came back up, hovered around the 61.8 again, and started moving back down once again. Exactly what type of pattern this is making right now is a little bit unusual. I can't really tell. I'll probably be able to tell what pattern it is when it's complete, but you can see that the Fibonacci grid off of the E wave, this would be wave 1, wave 2, this could be wave 3, we could be doing some type of expanding ending diagonal or something like that. But time will tell with that. But as you can see, by putting your Fibonacci projections in the correct spots off of very, very clear patterns, this is a triangle, A, B, C, D, E, wave 1, wave 2, and then wherever it ends up going to. As you can see right now, we've moved down to the 200 exactly, and have now bounced back up. We're at the 161.8. I do have a feeling that it's probably going to go a little bit lower in the evening action before it starts to support, but this is telling us that this leg down should be the last leg down before we have a decent retracement. So this is how I use Fibonacci projection intraday. I also want to note too the 19.1 projection, which is something I use quite extensively. I never really put it on my grid just because I always know that it's there, but just to show how well this works. Let's take this first move here this morning. And the 19.1 is basically just the halfway point or the midpoint between the 0 and the 38.2. Look at this. Boom, boom. Come back down. And where did it support? Right at the 19.1 for the next wave up. So this is something I'm always watching for. And if you start looking at all the internal waves, a lot of times when you get a deep retracement like this often falls on a 19.1. I find the 19.1 to be much stronger than the 0.236 Fibonacci number. I think the 19.1 is way more prevalent than the 0.236. I also look at the 81% as being much more prevalent than the 78.6. So just something, some food for thought, something to keep an eye on, and let's see where this market's going to end up going. Basically, this is how I project the fibs every single day to basically follow the trend, find entry and exit points in the market. These are active. You do have to move them. You can measure every single wave if you want, and if you do, you may come to find a surprise that every move, or prevalently almost every single move, falls on one of these levels. And when you're using that along with following the market's internal indicators, it kind of gives you good turning points to follow. So anyways, folks, this is just another one of the videos I'm producing. I'm going to keep producing some more. I'm going to introduce some more things as we go also. Like one is this harmonic grid that's it's just basically 100%, 200%, 300%, and so on. And I always attach it to the very, very first inflection. That's always the move that's going to measure where the market's going to move to. Use the 19.1. You'll be pleasantly surprised that oftentimes in a deep retracement, that is exactly where it goes to support to, and we'll just keep going from there. I wish everybody a great day. Godspeed and good trading to you.